Hi there and welcome back. My name is Edwina Dixon. I'm a qualified mortgage and finance professional and have been in the industry for over 10 years. I've saved our clients well over $10 million and I'm here to help you save a whole bunch of money too. So stick around because I'm going to show you some eye-watering figures that are going to help you to understand how you can get more money back from the banks and keep it for yourself. Before we dive in, let me just go into the bit of the nitty-gritty and tell you who I am, why you should listen to me, and how we can actually help you if you feel like you need professional advice. So again, my name's Edwina Dixon. This is my channel. And what we're talking about here is finance, mortgages. I've been in the industry for a very long time, over 10 years. I have a multitude of awards, 15 plus, and I've helped countless Australians, mostly professionals, actually build their wealth. So if you want to be able to build your wealth too, this is the channel for you. Now, let's dive in. So today we're talking about interest saving strategies that will help you to actually get ahead of the banks. Now, this is something that you may have heard of, but perhaps you haven't really understood or you've never heard of it. Either way, this is going to save you thousands of dollars off your life of your loan, likely, depending on your loan, tens of thousands, if not more. So we want to look at a couple of different things. The main question that we're going to be answering today is, should you be making repayments every month or should you be making mortgage repayments every fortnight? Now, you might not think that there really is any difference between fortnightly repayments or monthly repayments, but I'm here to tell you there is. And we want to look at what are the specific changes that happen to your mortgage and how much interest are you potentially likely to save if you take advantage of some of these different adjustments that you can make to your mortgage. So first off, you might be thinking, could you even make this change to your mortgage? Could you even have fortnightly repayments? Is it something that every bank actually does? Well, the big thing is it isn't something that every single bank does, and that's okay. Some banks will allow it, some banks won't. The other element is it depends on the type of mortgage that you currently have. If you have a fixed mortgage, you won't be able to make the change. It can only be monthly repayments. If you've got interest-only repayments as opposed to principal and interest repayments, again, you won't be able to make this change. But if you have a variable interest rate, then you will be able to make this change, again, depending on your bank. And it will mean that instead of making 12 repayments, you'll all of a sudden be making 26 repayments. So why is this important? Well, it comes back to compound interest and the compounding effect. We're going to dive into the maths behind why this is important and how it benefits you. So hold on to your hats. It's not going to be too complex. I've picked numbers as part of an example so that it is really easy to follow. Let's dive in and have a look at this particular example. So let's assume that you've got a loan that is $700,000. And we're also going to assume an interest rate of 6%. We're going to be looking at the difference between monthly repayments first versus fortnightly repayments second. This is going to help us get a really clear picture on the difference between the two. So let's look at monthly repayments first. In both of these options, we're going to also assume that we're looking at a 30-year loan term. This way we can keep the numbers exactly the same so we can be comparing the specific difference in only the changes in repayments every 12 months. So when we look at the monthly figures, we can see that our repayments per month on average are going to be $4,197.93. Now, we aren't going to make any adjustments to fluctuations in interest rate or fees or charges over a 30-year loan term. We're going to keep all of these figures exactly the same so that we can best compare them. So if we look at the monthly interest rate repayments, we're going to be looking at repayments of around $4,197.93. Now, if we do the exact same thing for fortnightly repayments, again, having the loan amount, $700,000, the interest rate, 6%, the loan term, 30 years. If we then did fortnightly repayments, our repayments per fortnight would be $2,098.97. So now what we do is we take the monthly repayments and we're going to times it by how many loan repayments we would have over a 30-year term. So over a 30-year term, as monthly repayments, we would be making 360 repayments. That then means that the total repayments that we would be making on a $700,000 loan would be $1,518,854.80. Pretty big number. The total repayment that we would be making over the life of the loan, if we were making fortnightly repayments, would look like this. It would be our fortnightly repayment times by 720 repayments, giving us a total amount of $1,509,774.40. Now, to understand the difference in how much we've actually saved in interest, monthly total 30-year full of repayments, take that away from our fortnightly 30 years worth of repayments, we're going to look at the difference. That difference is $9,080.40. Now, you might be thinking, that's not that much, Edwina. That's less than $10,000 over a 30-year period. Well, here's the kicker. Interest rates do change. They fluctuate all the time. They go up and down. And the reality is that over that period of time, you're going to experience interest rates going up and you're going to experience them going down. In our example, we're looking at interest rates when they're at 6%. Now, if interest rates were back at 2%, then yes, you could argue there's not much difference. Maybe that savings isn't worth it for you, for your personal financial situation. But what happens if interest rates go up to 8%? What if they go to 10%? At that point, you might be starting to think, actually, over the life of the loan, the amount of interest that you're then going to be saving is a whole lot more. Now, we're going to be talking about other different ways to save on interest with the different tricks and tips that we can give you and help you to understand the different ways that mortgages actually work here in Australia. But for now, this is the first step that I want to encourage you to look into, is working out, should you be actually having fortnightly repayments or monthly repayments? So let's say you've now worked out that actually you should be doing fortnightly repayments instead of monthly repayments. The easiest way to do this is to actually jump onto your app or to get onto the online banking for your particular bank, and you should be able to easily enough actually request that change to your repayments. If they don't allow you to do it online, give them a call. For this particular strategy to work, to be able to save you thousands of dollars, make sure you are consistent. Here's where you want to make sure that you set up automatic repayments. You're not going to leave it to chance where you remember to actually make that repayment every fortnight. Instead, you want to be setting up automatic repayments so that it happens without you having to think about it. Consistency is key. As you perhaps have heard with compound interest, one of the biggest things is actually having that repetition continue to happen so that you can build on the momentum that you've already gained. You don't want to lose it by missing repayments. And if you need help, get in touch. This isn't just about taking control of your finances. It's actually being able to guide your finances so that you can decide where your financial journey is going. It's up to you to actually work out what is it you want from life, and to use money and mortgages and debt as the tools to help you get there. I hope that you found this video helpful. Look forward to seeing you in the next one. Ciao.